Welcome back. Few minutes away from the opening, and the SGX Nifty is suggesting it's going to be a rather good one. But let's talk about a couple of stocks. And Dipan, I want to ask you about some of the cement names. But before we do that, just want to run through a Motilal Oswal note they've come out with on JK Cement. They have upgraded the stock to buy, and they've highlighted two factors. One is the growth plan, second is the savings. That's what could drive their earnings from here on. They're building in a larger scale company as well, and market reach in the grey cement division, which will fuel their future growth. In terms of their outlook from here on, they are saying that the EBITDA could grow by around 12% over the next few years. That's 13% CAGR in grey and 10% CAGR in white. And in the current expansion itself, they'll be adding closer around 10 million tons in the next 3 years. 8 million tons out of that will be in central India, which will make them a prominent player in central India. Well, Dipan, that's what Motilal Oswal has to say. They're clearly excited about the stock. In fact, yesterday, a lot of these cement stocks did pretty well. What's your view on the space, if at all, on JK Cement?
Nigel, the view on cement is negative. And with the entry of Adani and the way Ultratech has also announced aggressive ramp up of capacity, I think that has led in all the players within the sector to ramp up their capacity at any cost. And that's going to lead to overcapacity, glut, lower utilizations, impact on margin and lower return ratios as well. So I'd be very cautious in cement at this point of time. Last few quarters, we did see that they were unable to pass on the energy and material price increases. They do not have the same kind of pricing power as earlier. And I'm not sure the price discipline with the industry has maintained for so many years. That will remain going forward as well. So I want to be a bit cautious on cement. There are many other excellent ideas outside the cement industry. We spoke about Larsen and Toubro. There's real estate. There are other infrastructure developers and engineering construction companies. I think all of those should do much better than cement going forward.
Okay, in that context, Dipan, there are a lot of companies coming out with numbers today. There's Sun Pharma, Tech Mahindra, Voltas, Whirlpool, LIC Housing Finance, Cholamandalam, and many of these companies have given great returns in the past. Anything where you're going into the earnings strong and where you expect that perhaps, retail investors can look at these names?
See, I think we are very positive on Sun Pharma. And as a portfolio manager, we need to have some allocation to pharma, which is a bit of an underperformer in a difficult industry. So we'd like to track how Sun Pharma's specialty products division is doing and what kind of an impact it is going to have. I think that if they're able to maintain the momentum with the last 2 quarters we saw on the specialty products side, then certainly I think Sun Pharma is a very interesting idea. It's a large cap company. Therefore, it offers some amount of safety, and it's following a differentiated business model and maybe perhaps ahead of its time. So let's see what the numbers are, but generally we are positive over there. Another company which we and our clients are interested, which releases earnings today, is Cholamandalam, and that is amongst the best in class when it comes to lending to the vehicle and the auto industry. And even when the entire sector was going through tremendous stress, they have been managing their affairs pretty well. And NPAs have always been under control. Valuations are reasonable, and it's a secular growth story. So we're positive on that stock as well.
Dipan, do you track Supreme Industries, high quality, high return ratio company, a market leader in its segment, but stock's not done very much. Yesterday saw a big move. I think it came out with numbers as well. Any thoughts?
Yeah, we track it quite closely. In fact, it's one of the larger holdings, and disappointed with the numbers, but pleasantly surprised with the market reaction to it. And this company, a lot of volatility has creeped into the earnings because of inventory gains and losses. And that's something which we're not very completely satisfied about. But underlying volume momentum is good. It's a strong player within its sector, market leader, and excellent capital allocation policies. And it's a great play on rural spending, overall economy doing better, agro as well. So I would say that given the risk return profile, we remain invested, but I would avoid making fresh investments at these levels.
Okay, let's just take stock of the pre-opening rates, which have settled much higher. The Nifty is indicating an opening which is up 1%, up 184 odd points. UPL, Eicher Motors, Reliance, Axis Bank and ICICI Bank are your big gainers this morning. Largely led, of course, by the heavyweights, whether it's Reliance, Axis Bank, ICICI Bank, all looking pretty good. Tata Steel is down 3.5% on the back of weak set of numbers that the company reported and good earnings from L&T and Bharti Airtel. So let's see if there's some follow-on buying over there. but sights are set on the 52-week high. Dipan, thanks a lot for joining in. Have a great day. We'll come back to you later. For now, we have a quick comment coming in from the management of Castrol. They posted a muted set of Q3 numbers this time around. The company's margins were impacted because of higher crude prices, forex and inflationary pressures. Dipesh Bakshi, who's the CFO and whole-time director at Castrol India, joins us now to talk about that. Mr. Bakshi, good morning and thanks a lot for joining in. Just a little bit about the margin performance, right? This time around, there was a bit of a crimp down, but you spoke about price hikes as well as cost control initiatives. How much was the price hike in Q3? Are there any more left? And what would the average margins be for the company in the second half?
Good morning, Sonia, and thanks for having me on the channel. Yeah, you're right. I think this quarter we've got hit on various fronts in terms of the high input cost, mainly driven by base oil, which is our key component, and forex as well. In terms of the responses, clearly we have been proactive. We have taken 3 price increases during the year. We took one in March, we took one in June, and we took one in September as well. So that has obviously helped us in terms of tiding over the input cost increases. We also have a plan where we look at our costs very closely. So overall, if you look at it from a point of view, most of the COGS increases, which is the input cost increases, we have been able to recover in the 9 months that have ended in September.
So what would this mean for your margins in the calendar year 2022? You've had, of course, 25% margins on an average up until now. Do you think this is something that you can maintain, or could it, be lower than that? What's the target?
I think 25% is something that does look a stretch, given the outlook of the next 3 to 6 months. I think forex could be anybody's guess where this will end up with. Having said that, we always look at the pricing in the market from a strategic angle, and we took one in September, which was very forward-looking. I think there are a lot of other initiatives which we are doing in the market from a point of view of making sure that not only the core business, but other initiatives in the service and maintenance as well start generating revenues for us. So I would say it is more a band of margin that we are looking at, anything between 23 to 25%. I think there will be quarters where we will operate at a lower band, but then, idea is to clearly operate at the 25% range, which has been our trajectory over the last couple of years as well.
Okay, all right. Hi, Mr. Bakshi. If you could give us a sense, what was the realization in the past quarter, because you're saying that you've increased prices numerous times, and also there was only a 4% growth on the top line, right? So all of that was realizations, or was it on volumes?
So firstly, Nigel, thanks. I think from a point of view of the overall 9 months,
yes,
I would say it's been a mix of both volumes and pricing. Our volumes have gone up almost 6-7% compared to last year 9 months. As far as this quarter is concerned, volumes have been under pressure. It has taken the impact of 3 price increases that we have had. So to summarize, volume plus pricing in the 9 months period, largely pricing in this quarter.
Right. Would you need to give in to a little bit of softer pricing? There is a big difference in the market between, your products, which of course are at the premium end, and various other products, right? I think even the number 2, number 3 player, there's a big difference in pricing. Would you need to consider kind of coming off a little bit if you want to ramp up volumes? Is that a trade-off you're willing to make?
Yeah, a great question, Prashant. This is something we look at always. Our market share is in the entire private sector. We've got plus 20% market share, which is the highest. So we are the number 1 in that. And in fact, if you see personal mobility, which is cars and bikes portfolio, there we run a market share of more than 30%. The price volume equation is always a trade-off. But having said that, I think we are very clear in terms of how we are positioning our brand. It is a premium brand, and we want to make sure that we are operating within that premium. But that premium comes with the right technology and the customer satisfaction as well. We do take interventions on pricing. We've done that in 2020, I think, when our CVO portfolio was at a very high premium, and we made that intervention. We've also gone away from just taking a blanket price increases. We look at it tactical. We look at product, market, and segment, and make the necessary interventions as well. So when I say we've taken 3 price increases, it's not been across. In our agri products, we did not take a price increase in the June quarter, mainly because it's a quarter where it's a season. There is a tractor segment in which we sell our products as well. So we continuously do that in terms of making sure, but not at the expense of just downgrading the product.
All right, we'll leave it at that, Mr. Bakshi. Thanks a lot for joining in. That's the first of the auto sales numbers that's coming through for the month of October. Escorts total tractor sales up 7.2% year-on-year at 14,492 units. The management commentary is actually quite good. They say that festive demand was good, led by above normal monsoon and higher water reservoir levels. For the coming Rabi season, all macroeconomic factors remain favourable for the industry. However, the overhang of some unabsorbed commodity inflation is the only one that remains a concern. Escorts are looking good, 7.5% overall growth. Export sales have fallen, but exports are very, very small contribution for Escorts. For them, the main contribution comes from the domestic business, which has seen an 8.6% year-on-year growth. And if you look at it from April to October, it's a 6.5% growth that Escorts has seen in their domestic business at 59,847 units. Sudarshan Sukhani is with us. Sudarshan, just a quick comment on Escorts, the stock at this 2,050 rupee price. Is the risk-reward favourable for traders?
I think it's an investment idea stock, and if you're looking at a 6 to 12 months horizon, at current levels, it's worth buying into.
Okay, and what's the big call at 910?
Well, ACC is a buy, and the index itself at current levels may be taken as a profit-taking event with an idea to re-enter in the 1 or 2 days.
Okay, all right. Thanks for that, Sudarshan. Mitesh, what about you?
Yeah, I will go with the buy on Aditya Birla Fashions as the top call for the day. Stop at 347, targets of around 367 to about 370.
Okay, well, let's get a call on some of the big stocks in focus. By the way, Reliance is back at 2,600. So that's had a pretty smooth run over the last many days. Your top Nifty gainer right now, followed by ICICI Bank. There's a lot of basket buying that you've noticed in the last many days. A lot of the heavyweights, the bluest of blue chips, the HDFC Twins yesterday, Reliance Industries today, ICICI Bank looking good. But L&T is the one that may get top honours this morning on the back of good numbers. Vivek is here to give us the latest on that. Vivek.
Well, good morning. Yes, L&T definitely in focus on the back of a very strong Q2. While the numbers were above what the street was anticipating, as well as above the CNBC-TV18 poll. It's just highlighting a few important facts. Number one, the company has reiterated confidence that it's going to be able to reach the upper end of the guided range of 12 to 15% as far as order inflow as well as revenue growth is concerned. Also, the road asset, the complete subsidy is something that the company is looking to sell off. And yesterday they did mention that, in this particular quarter itself, they would be going ahead and signing an agreement. The Hyderabad Metro divestment is going to be delayed for a few years, and the company tries to go ahead and increase ridership and reduce debt on that front. Brokerages are extremely bullish as far as L&T is concerned. CLSA has gone ahead and said that despite the miss as far as the core EPC margins is concerned, they believe certain one-off factors impacted, and they believe margins will rebound quite sharply. Morgan Stanley has gone ahead and raised their EPS estimates by 2 to 7% for FY23 to FY27. So definitely this particular stock will be on the radar.
Okay, all right. Thanks a lot for that, Vivek. Well, the biggest loser on the Nifty today is Tata Steel, and that's reacting to its numbers. The numbers were a miss actually on the consolidated front. The India business as well was the big miss, which is bulk of their profitability, and Europe was more or less in line. The problem is the debt number as well has spiked up because of the acquisition they have made. Let's highlight a note coming in from CLSA. They have downgraded the stock to sell. They've cut their target price around 90 rupees from around 110 rupees. And they've trimmed their EBITDA estimates because they're factoring in lower profitability, primarily from Europe. Now, they've commented on both the businesses. On the India businesses, they're expecting margins to improve from here on, though they see a downside risk to India steel prices on the whole because they believe it's trading at a premium in comparison to imported steel. On Europe, they say they see meaningful downside to the European profitability on the back of lower spreads, and also the contract prices are likely to get revised down. They have a con call later today. I'll as well speak to them. but it appears the street is a little bit worried about Europe, and also the debt reduction appears has come to an end for now at least.
All right, Nigel, thanks very much for that. Stock in the pre-open indicating what about a 3-odd%, a lower start. Bharti is the other one which reported, and ARPUs look good, and overall it's been a good set. Let's revisit the numbers. Rima is here with more. Rima, hi.
Hi, good morning. So Bharti's consolidated revenues and margins have come in ahead of street expectations. So there is a beat over there. Consolidated margins expanding by 70 basis points to 51.3%, again surpassing street expectations. The miss was on the profits on account of an increase in the finance cost, which went up by nearly 400 crores sequentially. CLSA called it a solid set of earnings. JP Morgan went ahead and raised the target price to 860. There is a conference call at 2:30 p.m. later today. When you compare Bharti's India mobile business versus Jio, the numbers look better. The only place where Bharti's numbers are worse than, or don't match up to Reliance Jio is perhaps on the subscriber addition. Jio subscriber adds at 7.7 million is much ahead of Bharti's. The key positive in the numbers in Bharti was the ARPU increase without a benefit of a tariff increase. And Goldman says that perhaps we should expect another tariff hike before the end of this calendar year. Back to you.
Okay, thanks a lot for that. Just 30 seconds left. Those are Bajaj Auto's numbers that are flashing on the screen. Two-wheeler sales under pressure, down 13% at 3.41 lakh units. The problem for Bajaj Auto has continued to be the fall in exports. All the domestic volumes have looked good. More on that in a bit. The first take on the market looking pretty good. 18,091 on the Nifty, holding on to that 18,000 level. The mid-cap index up about 0.3%. And the advance decline ratio, a solid 3:1 in favor of the advances. Remember, the 52-week high is 18,351, so we're barely about 300 points away from the 52-week high. What's leading the gains this morning on the index? It's Reliance Industry that's taking top honors this morning, so up almost about 1% or so. There's ICICI Bank up about 1%. IndusInd Bank is up about 1%. Power Grid is up 1.5%. Largely a lot of heavyweights. So ICICI Bank, Infosys, Reliance, and HDFC, Kotak Mahindra Bank also well in the green. Auto stocks doing well. M&M Tata Motors ahead of their numbers this morning. Sales numbers, that is. Tech Mahindra ahead of its earnings is up about 1-odd%. TCS, HCL Tech following suit. And then you have Maruti ahead of the sales numbers as well, looking good. SBI comes out with earnings later this week. So that one ahead of its earnings is good. The only stock that's bucking the trend, of course, is Tata Steel because of the weak numbers this time. So down 2.5%. Followed by Axis Bank, a little bit of weakness there. You have Coal India and ITC that are just trending in the red. And L&T, despite a good set of numbers, remember the stock has run up quite a bit. So L&T is just trending in flat line right now. But otherwise, it is a cracker opening for the market. A century straight off the back for the Nifty, and the Sensex up over 300 points. Looking pretty good.
Well, looking pretty good, Sonia. And a few stocks to highlight. Then we just spoke to the management of AJI Green Tech. They sounded pretty optimistic about the future. And also, effectively, they'll be doubling their revenues post that acquisition. So it seems, at least for now, the street likes it. Funding, there will be a question mark. Nykaa, the star of yesterday, the stock has opened up the gain of close to around 5% yet again. So a big move is what we're seeing on that particular counter as well. Some of these mid-cap IT stocks that did well yesterday, they're seeing some follow through. So Coforge is higher in trade today. For the time being, Escorts Kubota, that's done a bit of a U-turn. And Intellect Design, after taking a cut of close to 13% yesterday, well, it's down yet again today. So it's a pretty good start. Some bit of selling is what we're witnessing at around the 18,120, 18,130 odd mark. So keep an eye out. And by the way, we have that large trade that's finally taken place. Axis Bank, 4 crore shares changing hands at around 895 rupees per share. So keep in mind that today's institution numbers will get skewed because of this large trade. Interesting to see who the buyers were.
All right. So 101 points, and this is looking pretty good overall. For the market. The high is, the opening, by the way, was the high, which was 18,130, and we're at about 18,111. So it's a good start. Absolutely no doubt. Nykaa, of course, as Nigel pointed out, Power Grid is up 2%. That is coming up with decent volumes as well. Max Healthcare is at a new high. I think it's been doing well last few days. It's up 3%. Karur Vysya Bank is up 1.6, 1.7% at 105, 106. Equita Small Finance Bank is up 2.8, 2.9. There is Data Patterns, which is up 1%. ITI, I mean, low volume sort of move, but that is up another, I think, 4-5% as well. I think we've highlighted more stuff. Escorts I think, came out with sales numbers, and we'll highlight that more in a bit, 1.5 lower. L&T is down 1%. The problem with L&T, and I think Vivek highlighted that as well, order inflow, etc. is good, but margins are actually pretty disappointing. And the street is divided. Vivek highlighted that Morgan has upgraded or increased their earnings estimates, but I'm seeing some downgrades as well. So it's a bit of a mixed reaction there on L&T. And then, of course, Axis and Tata Steel are slightly lower as well, right at start. 90 points on the Nifty. Sonia.
I just want to make one point on Bajaj Auto. The numbers that came out a while back, they're not looking good at all. In fact, the total sales are down by 10%, but exports are down by 31% for Bajaj Auto. And if you just look at the numbers in greater detail, the three-wheeler exports, which is the commercial vehicle three-wheelers, right? They're under intense pressure. The CV exports are down 42% year on year. So it's halved compared to what we saw last year because of the problems that we're seeing in a lot of the African markets. And that continues to drag down the overall numbers. So overall numbers, if you see, from an average of 4 lakhs in August, have come down to about 3.95 lakhs. But the real picture is in exports, which has been hit quite a bit. Just look at that trending line.
Absolutely. And, we'll have the management join us in just a bit. Exports too. So the export markets, large export markets have been under pressure. We'll try and get more from the management in a bit. Our market master of the day is Gautam Shah, founder and chief strategist at Goldilocks Premium Research. Gautam, great to have you with us here on the program. Thank you very much. Within sort of kissing distance of a new all-time high, Gautam, beyond then it is, blue skies and uncharted waters in that sense. Just what, 3.5% away. How soon do we get there, or do you think before that, one would have to wait a little bit, some consolidation possible? What's your sense?
Good morning, Prashant. Well, this kissing distance hasn't been going so well for the last 6 months because we've attempted to get past this 18,000, 18,100 area multiple times, but we've always found some resistance. In fact, the market has topped out around this level a couple of times this year. However, I think I want to take you back to a month back because when the world markets were in very, very bad shape, there were two scenarios. Scenario number one, wherein India fell and moved in sync with the rest of the world equities, I mean. And scenario two was the world bottomed out and got back and got in sync with India. I think the latter has played out beautifully in the last 2.5 weeks, given the kind of recovery that US markets have seen, some of the Asian indices have seen from the lows. And I think Indian markets, at this point, the fact that since there are no topping out signs, the leadership has returned, VIX has collapsed, seasonally we are in a very positive period, banks have started to do well. I think there are just too many factors which suggest that this attempt should take the Nifty past 18,100, which has been the big resistance. And once that gets confirmed on a closing basis, we should see new lifetime highs past 18,600. So I would remain bullish. And if you really go by the breadth data, the market is nowhere close to being overbought because the mid caps and small caps haven't really participated in the last 2 weeks. It's really been the large caps led by what's happened, in world equities. So I would remain bullish, stay invested, and use all dips to top up.
Okay, remain bullish, stay invested, and top up on every dip. Gautam, if you're bullish on this market, right, what are the kind of stocks that you see could outperform? If this October rally has more legs, then where does the leadership emerge from?
Well, the leadership is returning on an overall basis, which is good to see because 6 weeks back, the problem was nothing was doing well. Reliance was in a difficult space. IT index was not doing well. Banks had seen a very large correction from 41,000. And now all the three major pockets of the Nifty have come back strongly. But clearly, it's all about the banks. I think the kind of outperformance that it's seen in the recent past and the fact that it's just 1.5% away from lifetime high tells me that banks are going to lead the way even from here. So our working target near term would be about 41,800, which was the previous high. I think in this attempt, we will get past that number. And once that confirmation comes, we should see 43,000 to 43,500. Apart from the usual poster boys, which is ICICI Bank and SBI and maybe a Canara and BOB, I think some of the other underperformers are also attempting a comeback. So I would still be very, very positive on banks, followed by autos and capital goods.
Hi, Gautam. Morning. What about the metals pack? Index has been a big underperformer. Things are rather gloomy. You believe there's more downside here?
I'm not sure whether there's more downside, but I'm definitely sure that there's a lot more underperformance because any index which doesn't participate while the Nifty goes up 1,200 points is clearly a red flag. and there is just too much happening globally. And it just seems as if the smart money, has moved from this sector to some of the other sectors in the market, which is quite visible if you do ratio analysis on many sectors. So metals is a complete avoid. I think it's probably the only sector in the market which does not have a good setup. Everything else rock solid.
Just a few names which are in the mix. So Nykaa has cooled off a little bit. If you can pull these up quickly, it's up 2.7. It was up 5 when we started. Apollo, so we highlighted Max Health, but Apollo Hospitals is another one which has joined the ranks along with Max Health from the hospital space. That's up another that's up 2.5 now. And sort of in that same space, the Path Lab companies, Metropolis is up 3% on decent volumes for this time of the day, and Lal Path Labs is up about 3.25% as well. So these are new additions which one is seeing. Another new age kind of company which got smashed is Delivery. Delivery is up 6%, 364 on delivery coming in at this point in time. Gautam, the one space which has done very, very well, very strong momentum is the PSU bank space. In the last, 4-5 days, look at names like Can Bank, Bank of Baroda, Bank of India. Is that a space you would like to trade based on momentum, pure momentum?
Prashant, for the last 6 to 8 months, I've been batting very strongly for the entire PSU basket. I've been saying that there is a structural change that has happened. The sector has seen a lot of relative strength in the recent market weakness. PSU stocks stood out beautifully, and now they have come back very strongly. So we like the entire basket itself, and I think the index can appreciate anywhere between 15 to 20% quite easily, led by Coal India, which is our favorite. But if you look at the PSU banking space, what is interesting is that we've seen a massive breakout versus the Nifty, versus the Bank Nifty, and versus the private bank index. In fact, we are putting out all of these details in our big picture report, and we feel that this is again a structural change. And because they have been under-owned for so long, the room for upside is substantial. SBI clearly remains a favorite. I think it can do much bigger things going forward. And the other names that you alluded to, Canara Bank and BOB, also have potential. But I wouldn't go very speculative. I wouldn't go to the smaller 2-digit names. I don't think they have so much potential.
What about autos, Gautam? Because over there's a K-shaped recovery, right, as we call it. I mean, on one hand, the premium domestic market is doing very well, whether it's M&M, whether it's, Royal Enfield. But on the other hand, the export market continues to get hit. The rural market has not recovered in entirety. From a technical standpoint, what are the stocks that you still like?
Well, Sonia, since you track the auto index so closely, you would know that, the breakout really happened above the level of 12,000, on the auto index. That was the number which was a resistance for almost 2.5 years. Once that level got cleared, it just opened up blue skies for the index. And thereafter, there hasn't been any stopping it. But as you rightly pointed out, you had to work hard for returns because a Hero, a Bajaj, a Tata Motors haven't done well, whereas an Eicher Motors, a Maruti, and an M&M have done beautifully, even an Ashok Leyland. And I think there is a lot more potential for this set of stocks, along with Tata Motors, which is my favorite pick among the underperformers of the recent past. So I think on an index level, our working target is 13,800. And over the medium term, we are looking at about 15,000 for the auto index. So I think this is a trend, which is here to stay. Again, they have underperformed for a very long period of time. So I don't think the outperformance is going to end very quickly.
Okay. What else? What else is on your radar, Gautam? I mean, as trades, both on the long and the short side, if there are any on the short side.
Prashant, on the long side, I think we continue to like capital goods and real estate. I think capital goods will do wonders over the next 1 year. It has been my top pick this year. And I see that index appreciating 20%. I know we are talking about L&T results, but I remain extremely bullish on L&T, and I feel it's going to be one of the best performers in the sector, in the index over the next 1 year. And let's not forget real estate, where I think likes of DLF, Oberoi Realty, Brigade, Prestige, all setting up well for large upside. And let's also not forget the mid caps and small caps. I think going forward, the next couple of quarters is going to belong to that segment, because the Nifty is an elephant. It'll not be in a position to run very hard. But mid caps and small caps, after the recent consolidation, are setting up beautifully. And I think the momentum is coming in there.
All right, Gautam, I want to know about the IT index or the IT stocks. Everyone was saying gloom and doom, valuation-wise, they're very, very expensive. Some of the commentary that came out from some of these big managers is a little bit mixed as well. But the index, to be fair, if I look at it from the end of September, it's given you returns of about 9-10% odd. It's seen a phenomenal bounce actually. What's your take on this one? Towards the end, it did start perking up. Your take?
Well, Nigel, generally people don't participate when this initial 9-10% move comes because, as you rightly said, there was a lot of gloom and there was so much projection on the downside. But the fact that it did not fall and it just stayed in a range for the last 8 weeks was a win for me. And I think now with the IT index sustaining above 28,500, I'm of the view that it is one of the better risk-reward opportunities in the current market. The only problem is, these global factors, which are just too fluid at this point of time and can impact IT. But nevertheless, I think if you are in the big four and if you are in some of the other names like a Persistent or a Coforge or a Happiest Minds, which we like from a medium-term standpoint, I think there is a lot of money to be made. So IT, we like as a basket. It might not be momentum right now, but it's definitely an investing opportunity.
So you started the discussion by saying that there is some resistance around this 18,000, 18,100 mark, right? But you're still quite optimistic on India, at least on the Indian market. So what makes you circumspect around these levels? And what would your targets be? Say if you're looking 1 year out, same time next year, where do you see the Nifty?
Well, I'm not too circumspect, Sonia. I think it's just that in the last 1 year, we've had the Nifty correct from 18,100 many times. And therefore, just about every market participant will be watching that number. I just feel that there is enough evidence on the table to suggest that this time we will clear that. And once we clear that, there is no stopping till about 18,600. But if you have to really look at the bigger picture and India's outperformance in the world, I think my upside working target is 20,400. It might sound like a very big number, but in percentage terms, it's nothing special. And that's probably the reason I think this is a bottom-up market where you have to commit into mid-caps and small caps.
All right, Gautam, thank you very much. It's a pleasure. Appreciate you joining in with that perspective as always. So, 18,100, as Gautam pointed out, I mean, the market has many times in the past got to those kind of levels and come off. I mean, the last instance was, of course, in September when the market got to these kind of levels. The high back then was about 18,100, around these levels. And of course, before that, I think in April of this year, you got to about 18,100 and then the market reversed. So third time, let's see what happens. The last two instances, of course, things did not work out very well. Well, just a few more names which are kind of reacting. Escorts is now down 3%. So 1978 on Escorts. There is Gujarat Fluorochem, which is down 2.6%. That's been a phenomenal performer, but back at about 3,700 now. Blue Dart is down about 2.33%. So that's at about 74.8. And Supreme Industries, we were talking about this one with Deepan earlier. Reacted, came out with earnings not too good. Stock, of course, has been languishing as well. That is down 0.5% or so after yesterday's 5-6 odd percent up move that we saw.
Just one more stock, Prashant. We just did the management of AGI Green Tech. They're doing 2,000 crores. They're going to add another 2,000 crores going with that acquisition, and their market share as well will go up. There's a con call later today, but for the time being, the street has taken note of that, and that's why the stock is up closer around 4%.
Okay, well, in the green, right? AGI Green Pack doing its bit for shareholders. But let's talk about Bajaj Auto now, because the numbers looked disappointing purely because what's happening on the export front. The total sales wholesale numbers for October were down 10% at 3.95 lakh units. Exports continue to be under pressure. Export sales are down by 31%. And if you look at a breakup, then the three-wheeler, which is the commercial vehicle exports, are down 42%, while two-wheeler exports are down 29%. Rakesh Sharma, the executive director at Bajaj Auto, joins us now to talk about that. Rakesh, welcome to the show. First, a word on exports. How long do you think it would take for things to stabilize across the African markets? And what's the latest over there?
Good morning, Sonia. I guess, given that all these issues are, the root cause is the macroeconomic environment, particularly the strengthening of the dollars and the lack of availability of currency, US dollars for international trade. I guess it will take probably another couple of quarters before normalcy starts to return. That's been our experience in the past when we've gone through these cycles. At a retail level, every month is better than the previous month. And that is very heartening because it indicates that the markets are digesting at least the price increase which is taking place because of inflation. Albeit it is happening at a slower level, but directionally there is recovery at retail level. And once the currency availability, etc., improves, I think we should be heading back to normalcy. And that might take a couple of quarters.
So when you say it will take a couple of quarters before normalcy returns, on an average over the next few months, do you think you could maintain this 1.4 to 1.5 lakh run rate in export wholesales? Or do you think it could get worse before it gets better?
No, I think it's already improving because we took the big hits in the period of July and August, where we recalibrated our shipments to take into account the lower level of retails and reduce the stock in the channel and the exposure of our channel partners. So that hit has already been taken, and now actually our shipments are running behind retails. So I would say that there is every progressive month, exports should see a rise over the previous month.
Okay, hi Mr. Sharma, morning. So exports, that's a bit of an issue out there. But, if I look at it in the last few years, Bajaj used to be the biggest exporter, right? Suddenly TVS, they have ramped up their exports. And it seems out of the total export pie, they're grabbing some market share. Your comment on that?
Well, at a Siam level, I mean, if you look at the year to date, Bajaj Auto is still very, I mean, the ratios are very, very strong. It's still, I mean, unarguably the single largest exporter.
Right.
Yeah. So I don't see an issue over there. And in all the market shares, basically, we are looking at our export performance based on the market shares in the countries which we are operating in. And today, I guess about 90% of our revenues are coming from countries where we are number one or number two. So that's very important for us. What percentage of our business comes from markets where we are leadership markets? So we tend to have an outside-in view of our competitive position. And that, with the exception of probably 4 or 5 countries out of the 75 which we are in, is outstanding. Okay. And apart from those 4 or 5 countries, we have a decisive leadership on the ground in these markets.
Mr. Sharma, total exports in the second quarter were about a little over 4.5 lakh unit volumes, 4.5 lakh, 4.56. Will it in the would you have visibility with what you've done in October that you'll be at this level, 4.5 odd lakh, or maybe around here, in any sense?
That's what I just said to Sonia, that every month should be marginally better than the previous month. That's the trend which we are getting. But the precise number, as you know, is very difficult to estimate. Sure. It depends a lot on the availability of currency and of our distribution partners to establish the LCs, etc.
Okay, let's talk a little more about the domestic market where things are improving. How much has the retail sales been like in the 32-day festive period for Bajaj Auto compared to what it was in the pre-COVID time? And how does this compare to the industry?
Well, the retail story is a story of tale of two halves, actually, the upper half and the bottom half. And it's been a good festive, very robust festive, which has lifted the business. And the quality of the sales and the quality of growth for the industry and, of course, for Bajaj has been very good. Because the upper half now, which is almost 50% for the industry and 60% for Bajaj, is growing at twice the rate compared to the bottom half. And in that, which is the 125cc and plus segment, I think we have outpaced the industry growth. We will get to know this at a retail level only by middle of November, by the time all the registrations take place. But my estimate is that we have outpaced the industry simply because, driven by our performance in the 125cc. There we are now selling about over 1 lakh motorcycles in this period of 32-day, which you have mentioned, which is an outstanding performance given that we just launched this bike, this portfolio just about 3 years ago. So over there, we have certainly outpaced the industry. The new platform, which has been launched by us starting from October last year and then strengthened with the addition of the 160cc, which is a more mass product in middle of this year. It's done outstandingly well, which is now, we've got a very, very strong endorsement from the market of its acceptance. And it actually fills us with confidence as we expand the portfolio this month onwards in that segment. So the quality of growth for us has been very good in the 125cc plus segment, which has been our focus. And we've tried not to get distracted by the red ocean of the bottom half.
Got it. So when's the new EV coming out, the first EV? I mean, I know this is like a broken record. We ask you every time, but the timelines are getting pushed month after month. What's the latest?
No, not month after month, Sonia, but I presume you're referring to the three-wheeler.
Yes, the three-wheeler EV.
Yeah. And like I had explained last month, we have got the product, but we are not very happy that we are hitting the sweet spot in terms of the customer requirements. And I'd explained last time that you can see that actually the industry has not got it right for the commercial three-wheeler roller, and it is very clearly demonstrated by the fact that customers are not picking it up even when they have permits in a place like Delhi. Okay. So after extensive trials over there, we have taken feedback from these drivers, and we are trying to optimize the product so that once we come back, and that's the expectation from the market actually, because we have an 80% plus share there, there is an expectation that we will come with something which is absolutely 10 on 10. And we want to, not disappoint people. So we have said that it's better to sort of take a deep breath and work a bit harder on this. And probably by end of, the next quarter, let's say by March, trying to do it within this financial year, we should place it, we should launch it commercially. Good
speaking to you, Mr. Sharma. You ended it on the optimistic note. You're hoping that things improve from here. The three-wheeler electric launch should be in this fiscal, and exports on a month-on-month basis should improve as well. Look forward to chatting up with you. I'd like to ask you a few questions on the EV space, but that for another time. For the time being, though, we'll slip into a short break. When you come back, we'll get chatting with Mr. Vivek Chand Sehgal of